Good evening. This is the Elliott Wave update for the NASDAQ 100 for Wednesday, October 27th, 2021. Well, the NASDAQ did finally join the party of new all-time highs this afternoon, or actually this morning, and ran up to 15,715.25. Actually was morning here on the West Coast. East Coast, it was your afternoon. But it got up to 15,715.25 before it decided to turn south and head lower and put in its obligatory 100-point drop straight off the high. Pretty much in line with what it did yesterday when we hit 15,701, and then it dropped back, and then it just dropped 200 points. We didn't get quite that level, or maybe it's because they didn't have enough time to really start to continue to hit the market. Although as we come into Globex, the market is being bought up just a little bit. Not a whole lot, but just a little bit. And that, I guess you could expect for the finishing decline that we had into that final bell. So what does this all mean? Well, as I said yesterday, I had left a 5 there and I put it in parentheses. And the reason was because I could not rule out that the market would turn and just cruise all the way back up, get itself to new highs, possibly just even continue and start heading to these next levels, which would fulfill an irregular B wave scenario. The fact that it's only gone basically 8 points above that previous high still would make it irregular, but not essentially. It made a new high, but I still can call it a B wave. But whether we want to consider the new high is it's within question. So the new high would have to be considered in terms of labeling it a B wave, but in terms of major new all-time highs, I don't know. In any case, if indeed today's level at 15,017.25 did in fact complete the minute 5, and then on top of that, the B wave, the minor C wave and the intermediate B wave, then we are heading lower. And we should begin to form a 5-wave structure down on a larger scale. And the first on the hourly chart should be a clean 5 down, because that would just be the initial wave 1 of 5. So there's no determining whether it's going to be an ABC down. It's going to be 5 down if it is the C wave. The reason is all C waves consist of a 5-wave structure. So that is what I would be requiring or looking for on an hourly chart. So are we off to a good start? I don't know, but we can count it. If I take it down, we can take a look at inside this initial decline. You can say it was just barely, there was no catching your breath. A little bit there, but then it didn't make it and it just continued lower. Let me go down to the 15 and just kind of see if we can't see some of these internals into this little slide. Here we get a little bit, 1, 2, 1, 2, 3, 4, 5, 3, 4, maybe, and then another 5, 3, 4, 5. And that would then likely, at least on the 15 minutes, start to put in that structure. So I am getting more convinced that we should continue lower, but that's kind of how they left it yesterday over here. And then all night we just kind of sat like this. We have Apple and Amazon tomorrow. How much more selling do they want to do overnight in advance of those two titans producing their earnings results? So I think we could be in the same thing where we sit in a fairly tight little range all night, and possibly even tomorrow. But tomorrow we might see some activity with it in advance of they come in and buy the market. Now, None of this is cast in stone because there's just as many reasons to sell as there is to buy. And so we have to allow the market to tell us what its intents are. But what it does keep in focus for me as someone who trades the NASDAQ is that the volatility is going to continue on both sides. So the buyers will push and so will the sellers, who ultimately ends up being the dominant player, yet to be seen. But we have factors that could lend support to both sides. If a continued rally in Google, a continued rally in Tesla would add to the Apple Amazon earnings report. Amazon did manage to push itself higher, and it did get back above 3,400. So we know that the all-time high sits above 3,500, and when they did that, I believe they did it from lower than here, and just in one foul swoop up, hit 35, and then came back down. So we can't discount anything right now because the probability scale still sits basically at 50-50. 50% probability will go up, 50% probability will continue lower. So we need to continue to trade accordingly using the moving averages and price action within the day. Now, what's going to assist on a 15-minute chart if it comes down and breaks the 15-minute 200? Right now, it is below. It's got the 4 kind of curling up here because it's touching it, but it hasn't broken above it. It's on a 15-minute. So we've got these still pointing down. The 8's now crossed the 50. If the 20 comes down and crosses the 50, it's going to give more support to the selling continuing. And if all of them start to move down and cross the 50, cross the 200, then we might stand to get some acceleration to the downside. And that does fit if indeed this completed the high. Amazon and Apple still may come out with good earnings tomorrow, but it's from what level? So then we'll, determine, could it still go up? That remains in play until those earnings are out. After that, there's still several companies and some of the larger players. NVIDIA is yet to come out, and they don't come out until November. We have other, PayPal comes out in November. So there's still plenty of the larger players that come out later in the quarter with their earnings. So, and they're still yet to be heard from. So we still have that, but it's, they could blow the doors off, but if we're sitting at 15,300, well, they're not going to blow the doors off to new highs. I don't see that if we start to really decline. They may come out with good earnings and it would produce a pop in the NASDAQ depending on their weighting. But Apple and Amazon Apple has the highest rating within the NASDAQ. And I think Amazon is not too far below. And so in any case, tomorrow, be on our toes. We have a lot of things going on and the volatility still is in the market. And premium is still in the option. So the implied volatility is still heading higher. And you're going to find it on both sides. Depending on the stock, the fear is for upside. Depending on the index or stock, the fear is to the downside. So you're seeing premium come in all different directions. If you're an option trader, plenty of opportunity, many different places. So it's out there and it's available. Tomorrow, use your moving averages to help guide your trades. I hold very strongly to them on the 2-minute and the 5-minute chart. I also use a 1-minute chart, but I use the 2-minute and a 5-minute for a lot of the entries. And so for where direction's going to be. And then also use Fibonacci, use the Elliott. You can put in retracements, you can put in extensions if you're looking for how high things can get. If they start to move, you can run an extension. You can run a tracement to see how low things could come. And there are different levels that you can go out to, and you can start to fill in your own blanks in terms of what's the possibility. If this is done and we've done from here, well, you can run from there to there and just put retracements As this thing comes down just between here, what levels is it breaking and where might it find support in this initial phase? That's what you can do. It's not going to be, you can run them from here to here to get the entire B wave, so you're getting a cleaner idea. There's one that I'm going to add right now, and if that top that we're showing there is actually the high for the B wave, well, now we can add one calculation, and here it is just an absolute pure guesstimate, okay? Because we don't know for certain that 15,717 is it in terms of the high. So we're going to add one more in there and see what we come up with. We have that, and then we're going to go up and put it on that high. So being that it's considered irregular, but even as a flat, minimum that I'd be looking for is for it to come back to 14,378. Excuse me, 14,360 was that low. 68, excuse me. 68 being that low. But ultimately, 1.618 would be the subsequent correlation. If I'm going to, because it did break to a new high, so it's considered irregular. And on an irregular basis, the most common Fibonacci relationship between a C wave and the A wave within an irregular B wave is 1.618. And that would drop the market down to 13,555. So it's got a lot, if it is indeed underway. We've got a lot of proving, we've got a lot of support coming off. So still a lot to come. In any case, tomorrow, trade smart, trade according to your moving averages in the price. Do not get married to either side. Don't be too bullish, don't be too bearish. Be open to what will play out and make some money. Next update will be Thursday, the 28th.